Hello, my trading warrior brothers and sisters. Let's have a great week. I want to cover some of the forecasts that have manifested. You know, when you make a forecast and it then manifests, doesn't mean that you're going to have another forecast the week after. And if you weren't there for the initial moves, you have to just sit there and wait for some type of counter trend move to develop to take advantage of it. So I'm going to start off with the VIX. So if we go back just a few weeks, let me show a shorter term, a 4-hour chart. I was talking about all these wicks, okay? And it was early, right? But I said that it smacked of accumulation, that every time they tried to offer this market down, there were buyers that took it up to leave these types of candles with huge wicks, lots of hammers going all the way back. And then we had this first move out of the hole and it failed. But if you notice something else I was pointing out with S&Ps and Nasdaq making new highs, VIX didn't get close to prior week lows at 14, 15, and held the 16 level. And my assumption was that it could be carving out some type of right shoulder of a head and shoulders bottom or an ascending triangle, which is about 800 points that we're now breaking out of. Okay, so victory lap on VIX. This, should we close here, would measure back towards the highs that we had up here at 28. That's going to be the next stepping stone. We have a little bit of the moving average here. The 200-day, we're right up against it, so maybe temporarily it creates a little bit of a wall of resistance for the VIX, but I would not be short volatility at this moment. I think that we've had a very long-term base, and there is an expression out there that I believe I made up, but they give credit to Louise Yamada, and that's the longer the base, the bigger the launch into space. So this is a pretty big base, especially if you look at the monthlies, and do not short volatility. People get rich selling volatility during periods like this. And then all you have to do is have something like this when you're short calls on VIX products or short VIX products, and you give it all back in a week and then some. So as I kind of compare it to picking up nickels on the sidewalk until a steamroller comes down the street and flattens you. So VIX giving some very nice volatility signals. Currency wise, last week uh, gave a couple of different entries on the short side of US dollar yen. Since the dollar, although moving higher, it's more of a grinding type advance that we're getting here. Hi, Daniel. How are you doing? In fact, we're starting to, we did diverge up here and could be ready to get some type of correction in the dollar. And perhaps that might even soften the blow. But here's your yen, and talked about sales at 109.60. And then again at Friday, sold it at 110.18. Prior to retail sales, we had about what was a high, 34.16 pip drawdown. If you haven't taken partial profits, you could do it now. You have 100 pips in the yen. Part of my rationale for this was lower yields. I saw lower yields coming, and that was from up here when the yen was 110.60. So my contention, we'll see a 108 handle, not that far away in the end. And now we're approaching this blue line again. So yields may begin to find some support here on the daily. It's coming in, say tomorrow around 118. So another 3 bips or so, but I'm not ready to bottom pick this. And the one surprise was, and it's responding a little differently now later in the session, is that normally when you have US dollar yen going down, it means that yields go lower, right? US dollar yen going down, yields going lower. And it's usually supportive for the precious metals, which certainly wasn't Friday, failing from the resistance. And if you guys remember, when I was looking for a decline in US dollar yen, I thought gold could rally to 1830, but it wasn't my preferred short because of the gold silver ratio, which I've been talking about, had its breakout at 68.5. Look at how powerful it is right now, which means gold's your preferred long, silver your preferred short, and then just compare the two that you have right here. Here's gold and here's silver. Silver actually breaking down of this range. I talked about this 25 80 level, 200 days moving average support that it's broken down out of. And for weeks and maybe even months, I felt that the place to buy silver was going to be under this low, maybe even under the 22 handle before we're done. So gold as well could break back down to 1710, but the preferred short is still the silver. Okay, until this, if it is a bear market rally, which it very well could be when you look at it through a telescope, look at this move that we had, right? Where up here you could have exchanged 1 ounce of gold for 128 ounces of silver, you know, bottom down here around the 60 level, and we're trying to cut through actually a 200 week moving average right here. So it was such a big decline that who knows if we're going to get a 23% correction, which I have to update the fibs on that because I had it from here. So let's just see what happens to the fibs from here to here it is. And we'll just make this adjustment. Okay, so far we haven't even had a 23% minimum correction. That's going to come in right up there at the 77.87. So there's still some time left for silver to underperform massively. I mean, gold's unchanged right now with silver down 1.5. We've seen several days with gold acting much better than silver. I expect a continuation of that move. And the yen was one of the better shorts. Canada exploded, and that's something else that I got right last week was that this rally that we had in crude last week was nothing more than a failing rally. You can see it showing up quite clearly on some shorter time frames. This was the area, and I said under 74 that 69 was viable. A lot of people were looking to buy it under 70. Well, here's their opportunity, but there were a couple of nice recommendations to short the crude. I made the point that all the way up in the S&Ps, all the way up, look at the daily. What was happening in oil was that oil was actually leading this advance, outperforming most stocks in the S&Ps. And last week was different for about 5 or 10 trading days. S&Ps were making new highs up until later in the week. We peaked on Monday. I'll get to the stock indexes in a minute. But while the S&Ps were making new highs last week, WTI was putting in a failing rally. And you know, it looks to me like we have a breakdown. There's going to be bear market rallies in this. 69 was a primary example, a primary target, and we're there. Doesn't mean that's the bottom of it. I can make a case for lower numbers. Stay tuned on that. But crude and most commodities are going to remain under pressure until the dollar peaks. I think the dollar is going to have at least a short-term sell-off here. We got to 92.95, but before it's over, you could check all the video content. I was looking for, 95 to 96 in the Dixie before we complete this bear market rally and then possibly sharply lower levels after that. And the big call from last week was US dollar yen again, looking for the 107 handle. Here's a weekly moving average at 675. Let's see where some of the dailies are coming in. So I'm looking for, okay, so here's another moving average at right around the 107 level. Perhaps we just go for the stops. Anyone who's still long this pair, and something else I talked about, that there was no one short after we took out this high, and that all the stops were underneath the market, that there were stops here, they've been taken out. There are stops here, they're about to be taken out. Stops here, and this looks like the grand prize. Let's see if we could clean out the stops. And after this happens, there will be very few US dollar yen longs left. And perhaps by then, yields are bottoming. And we'll see what happens down here. But this has been the target. I don't believe we're turning into a bear market in US dollar yen. I think this is going to be an intermediate term buying opportunity down here for higher highs, and this is just another trade. So good call on that, if I must say so myself. Something I'm looking at that I may have missed is euro pound. Euro pound coming out of here at the bottom. I thought that we were going to tag the blue line, never got to it. We had a nice little weekly reversal, didn't get a 2-week reversal, but a nice blue candle getting follow through here today. I was hoping to be able to get a pullback towards 85.40 or so. I'm still going to be patient and wait for pullbacks, but to me, it looks like this 88 level is viable. That's where the 50 and 200, there's confluence where they intersect up here just a little bit above 88. That's where I think we're going in euro pound. Aussie making new lows. I think before it's over, we're going to see 69 when we're a commensurate low, when the Dixie's up around 95, 96. So for long-term buys, we're still 400 away, but you could get an intermittent rally here. As you can see, we're not confirming. And in fact, that's happening in euro as well. We made a new low and we're coming out of here. We could have a nice little bear market rally in the euro. The pound has really kind of become the weakness. Maybe we get a cable rally because I like the euro pound from the long side, but I'm going to wait for some type of fib retracement. 620, let's call it 120. So maybe halfway back, 85.60-ish. If we get a pullback, I like this trade. What you notice, even though the dollar was heading higher earlier in the day, US dollar Swiss, which struggled here, euro was making a new low here, right here. US dollar Swiss was not making a new high commensurately. Euro made a new low last night, and US dollar Swiss is making a lower high. This is its second lower high. So US dollar Swiss really struggling, shows you the demand for Swiss. If I wanted to be short the dollar for correction, this would be one of my prime candidates, although US dollar yen was weaker and the better trade selection. Even though the dollar was going up, you had US dollar yen, I thought would outperform the Swiss to the downside. And that's what happened. So we've already covered crude. Crypto's under pressure, but I want to show this chart here because I talked about this a couple of weeks ago. And you know what? You know how we're always, the Russell I thought was a canary in the coal mine that was tweeting and eventually singing with loud voice with all these other averages eking out, continually making new highs. It took all of this strength for the Dow to finally make a new high last week before reversing. And this was the canary in the coal mine. You know, a lot of people are telling me, oh, Dale, this is just, you know, we're just consolidating here off this big run. Well, I don't know, maybe. I posted here, I rarely say this, okay, but we were up here. And you know how we're always trying to finesse entries when we're in leverage instruments to reduce the risk on the trade by selling strength or buying weakness or trading a breakout and trying to get long or short as close to where we're going to be wrong as possible for money management purposes. You'll rarely hear me say this, and I did say it, and I did post it, and it was here. And I said, listen to this entry: sell the Russell anywhere. Okay, so to me, it didn't make any difference, you know, if you sold it at 228 or 230 or 225. It was sell it anywhere with stops over the high March's highs. Because I kept watching all these other indexes make new highs and waited for the Russell to follow suit, and it never did. And in fact, when you look at this kind of breakout, a lot of people were calling this line right here a breakout. And I know I've talked about this before, that when markets give you a lot of time to play an important breakout, to be skeptical, because normally maybe you get one retest of a breakout, but you shouldn't have one, two. Oh, here, how about Mr. Market being so accommodating? It was going to let you buy it underneath the breakout. So then we broke out again. You had one, two, three, four chances to buy it. And to me, this smacked of distribution. You know, stronger dollar should be constructive. Maybe there's going to be some rotation into this, but I think down the road, as long as we're not closing above 220 again, that's kind of my line in the sand for the bear case to continue now that we've had this breakdown. So 220, you could trail your stops if you sold it anywhere. You could take partial profits and trail your stops down to 220. So let's get to the S&Ps, because last week I talked about what it would take for a 2-week reversal, and that was this week right here, and the close was 43.49. So we got that close on Friday. Friday's close was 43.28. So we had a 2-week reversal, and even if you, to show that you weren't late on those signals, you, even if you took that signal, it was like selling it in the hole after a 50 handle break or so. If you took that trade at the close at 23, you're still up, even at this point, 54 handles. So I think that people that are listening to me now, traders that are listening to me now, may want to begin to at least take a look at the 2-week, 2-candle reversals on multiple time frames to see if the market's holding or reversing. This was the first 2-week reversal in quite some time. We didn't have any all the way up from these lows that we had back here at the 4,200 level. So, you know, when I look at this, I think, well, where's a natural place for it to stop? I know there's going to be rallies. There's going to be failing rallies. There'll be sharp bear market rallies, but I do see 3,900 as viable for maybe one wave of this decline in the S&Ps. As you can see, we did diverge on the weekly, and last week, even though we were making new highs, we diverged on the daily right here. We diverged on the 4-hour right here, and 2-hour right here. So there were multiple non-confirmations on the S&Ps making new lows as we speak. Even on the 15-minute up here, see this? we actually, if I went further back, you'll see we had a divergence there as well. So I think that we are, I said I thought we were going to have a rough summer in risk. Um, and, you know, it took, my timing wasn't perfect. I was early. I was thinking towards the month's end in June. And the high came in last week around the 12th. So about a week early on this call, but I believe it's beginning in earnest, and I don't think you're going to be late on this. In fact, I'll give you some of my longer term targets in the S&Ps is going to be back towards the pre-COVID highs, 3,300 to possibly the 200-week moving average at 3,000. And there'll be plenty of trades along the way. Similar action, although not as weak in Nasdaq. And Nasdaq, I was talking about this throwover, and in fact, Nasdaq was your strongest sector, outperforming S&Ps last week as well. And this is a 3-drive formation that we had a throwover from. So I am short these with SQQ being the instrument. I know it's kind of hard to see here, but we're getting back inside the throw over here. And in the NASDAQ, it's going to take closes back under 14,300 to get back inside this rising wedge formation. So NASDAQ's still the strength. Talked about the Dow. In terms of relative strength rankings, you had the Russell being the weakness, and then the Dow coming in second because it took till last week. Here's the March high in the Dow. We did not make a new high in the Dow until last week. So as far as weakness, the Dow, it took a lot of S&P new highs and NASDAQ new highs, and here's your gap lower opening right now, down about 600 pips. I kept showing the divergence that we had short term in Apple, but long term we had confirmed highs. So you know, I don't know there if we had some say it stopped at 140, we could actually have a new high, but I would not be chasing it. Here's the descending triangle in Tesla rolling over for Elon Musk to have another SpaceX event and have a rocket ship in Tesla. You need to close back over 700, back under 550. I think you're looking at 300 in Tesla. Amazon starting to give up the ghost. Again, it had a confirmed high on the daily, but every other time frame diverged right here. Microsoft, same scenario. It had on the daily confirmed highs, right up here, but then started to diverge. But most other time frames were not confirming. Google giving up the ghost today, that looks pretty negative to me. Don't believe we had, this was still diverging from the prior high in Google. Google looking vulnerable. Netflix never made a new high, and Facebook, after making a new high, it never even confirmed. So, Facebook, and that's a NASDAQ 100, which has been the strength of the move. Okay, so those are my thoughts. That some of these things are just beginning. Don't chase anything. I guarantee you, if you're patient, there'll be some type of failing rallies that'll set up here before we get into, or even if we do get into some type of acceleration to the downside. But I believe we've entered a period where both commodity prices and equity prices and the inflation trade is in a transition and a corrective period where I think a lot of things, if you're a long-term buyer, are going to get cheap, or if not cheap, at least back to fair value into the fall of this year. And you know, over the next couple months, you want to get your shopping list together and start thinking about what groups. I actually think miners, agricultural commodities, like DBA, the ETF DBA, will be good trades. The dollar rally should be terminating by then, and I think you'll be able to be long almost any currency against the dollar, euro, Aussie, they come to mind. And with that being said, um, we're trying to add value to what you're trying to accomplish, a very difficult endeavor, trading leverage instruments. So along with the analysis, I'd like to give you the whys so you're able to repeat it. I would recommend you come in to tradegatehub.com and comment on my posting and other contributors. And you know what? Be brave. Post a chart of your own and what you're seeing and become part of our mastermind here at TradeGate Hub. So with that being said, and a lot of risk off happening today, trade well, as Michael Venezia says, and as I say, as the trader development guy here at TradeGate Hub, don't just count your pips, count your blessings. We'll see everyone tomorrow. Thanks for your attention. Adios.